Here's our blog video for September 7th, 2012. And like we do, first thing we look at each day is the currency meter. This is the first step of our easy three-step Forex trading system. You can sort these and find the strongest and weakest currencies. And as you can see, the euro, New Zealand, Swiss, and yen are the strongest. Dollar, CAD, and pound are the weakest. So the first step of our system is to just simply focus on buying the strong ones versus the weak and selling the weakest ones versus the strong. So basically today you'd be looking to buy the euro, which is strong on all time frames, the real-time trend, which is we have statistical tools that measure the direction the euro is going versus the other ones. And we also have tools that show you the intensity of that direction. We average it together into one easy to read indicator histogram. Underneath that we have the 15-minute trend, hourly, daily, weekly, monthly. So it's pretty much a no-brainer whenever one currency is strong on all time frames and another one's weak. You want to buy that first one versus the second. Here's the euro-dollar chart. And earlier today is when this trend started. First of all, here, when you first bring up the chart, you want to see a couple things. Where's the hourly moving average? That's the green line in the middle. It started the day off above it, so that tends to lead to an up move. The second thing you want to look at is where was yesterday's point of control. The value areas tell you where the price most traded was, 1.2615, and the upper value area, which is right here. It spent basically 68% of its trading activity yesterday from the green to the red that you can't see. But the most actively traded price was this area. This is very likely to be support. It's another easy filter. And obviously the 15-minute trend's up, hourly, daily, weekly, monthly, all up. So basically we're looking to buy breakouts. You can see the first move went up about 50 pips. You got a pullback. That trade worked. Pullback right here. And there's a lot of different ways of trading this. You can use our trailing stops. You can use our digital signal processing based moving average. 5-period digital signal processing based moving average. Click DSP. Shifted 2 bars to the right, and it pretty much matches our intelligent trailing stop for both the entry and exit. And oftentimes it's actually even faster. It would have been into this trade here versus here, and it can be used as an entry and exit. Fibonacci profit targets are usually where the end of the move is. They sometimes will go up there and make one more wave up. So if you did buy this little pullback right here, basically the more up it goes, the more you need it to pull back. This first little tiny, maybe 10-pip pullback right here doesn't really count. It's not enough of a pullback. This went from, and one easy way to judge the pips is to draw your fibs on there. It tells you how many pips there are. You can see about 91 pips in that move, 87 I guess. So you would expect at least a 20-25 pip pullback. And from the second move up, it's about 112 pips. So a 10-pip pullback is nothing versus 109 pips. Here's a 38% retracement. If it comes real close to that, that's a pretty decent place to look for a pullback. And if you don't want to use our histogram form on the bottom, we also have the option of colored bars, which I'll bring up right here, and you can see. At first I thought I really liked the colored bars. I was planning on using them to trade with, but I do like the histogram better. I've been using histogram for years to trade with, so I'm just not used to colored bars. But one nice thing you can do with the colored bars, or to find entries, is just draw a trend line over those bars high. When it breaks that trend line, you get in. It's kind of like the displaced moving average with the digital signal processing. And another tool that's on this chart that's not on the other one is the hourly point of control. This shows you where the previous hour's point of control was. It takes a lot of memory, so I just put it on these charts and not the other ones. And sometimes when at the beginning of this trend right here, you can see a pullback. You might have went long right here. You would have lost. Went long again right here. You would have made 50 pips on that. And this pullback was decent. It went underneath the point of control of the previous hour and shot up another 25 pips. Notice how it came back, found support right at that level. You'll find that frequently throughout the day. It's very common for the point of control to act as a major support area like this, because basically it's showing you where most traders had positions during the previous hour. And sometimes the market's so active there are basically multiple bars during the same second, and that's why you have these little periods of no lines being drawn. Basically, there was a 5 pip movement in less than 1 second. So that occasionally happens during news events. And even up here near the highs, when you get a pullback, 2-wave pullback, 1, 2, you might go long here and have a small loss. The second one, you would have been in around 90, and you can see you made 20 pips. So if you lose 6 or 7 pips and then make 15 or 20, you get the loss back. And that's the power of the currency meter. It has you in the most actively traded pairs. Another one that was quite strong today, it wasn't as high at odds as the euro, because you can see the daily, weekly, and monthly trend of the euro is up. It's, without a doubt, the strongest currency, and the hourly trend made it number 1. The New Zealand was strong real time, 15-minute trend, hourly trend, and daily trend was up. Weekly trend only shifted up here at 10:30. But, anytime you see a lot of strength like this and most of the faster time frame trends are up, you can also look to buy that one. So we're looking for New Zealand dollar buys. And as you can see on this chart right here, price, let's zoom out a little bit. Here's the hourly moving average. Price is above that. Here's the point of control of yesterday. Here's the point of control of the previous week. So between yesterday and the start of today at midnight, it broke above last week's most actively traded price. That's a very significant resistance area. You can see it couldn't break through it yesterday. Once it finally broke through it today, it acted as support. And that, anytime a resistance area gets broken and then acts as support, it's a very key area to be buying. And you can see this one up about 10, 20, 30, 40 pips. You got to pull back here. And once it hits the first green band, I will give it one more shot to go up. But usually when it's above our upper containment bands, I'm looking for counter trend trades. In fact, if you start trading in a U.S. session and we're trading not at this point, but after that point, you might have bought this pullback here, and then you're looking for pullback counter trend trades. Now today it didn't really work, but most of the time, if you get into a trade between the first and second fib target, you're going to get a little bit of a pullback. And I tend to get into these kind of trades with scale on trades. So for example, I might sell 1 lot here, 2 lots here. That'll yank my average price up to around to the 13 area. This pulled all the way back to 02. So you could have made 10 pips on that counter trend trade if you scale in progressively. And there's really, in my opinion, from my own experience, no way to predict how far up these things are going to go. And for me, doing counter trend trading, the only way I've been able to do it is by scaling in the trades. Yesterday I scaled into a pound yen trade, and it didn't work out as well as I normally did, but I did make a few pips on it. And you can see during the U.S. session here, it went way above the upper band. Usually when you draw your fibs on these areas, these are areas where you can get in. I didn't think it was going to go above this area here, and I kind of scaled in here. And then later in the day, did one more off this next wave here. And it only pulled back to the 50 area. Let me scroll forward and show you that. So you get into trades up here. And actually, no, it was this area right here. I started getting into my trade right here. I didn't think it was going to bust out here, and it did. Scaled in progressively. My average price was somewhere around 56, 57, and it came down to the previous month's high. Couldn't break it. I sat there watching this thinking, that's just my luck. Usually counter trend trades like this come down 20, 30 pips. I only had a 2 or 3 pip net profit on this because of the wider spread. And when it couldn't break, anytime a resistance area gets hit and then gets penetrated, there are false breakouts and there are real breakouts. Real breakouts are signified by price going higher, and then when it comes down and retests that area, it can't get underneath it. So at that point, I knew if I didn't get out of this trade with 2 or 3 pips, I was probably going to lose 20, 30 pips on the trade, and it did go up. It is above the upper containment band, so it's outside of my risk zone. It's a pretty risky thing to buy above the green 3.0 band. Just as I don't teach too many counter trend techniques lately. I'm going to get back to doing 1 or 2 classes per week in our Forex class section. So you can see later in the day the yen started to show some weakness, and the weekly and monthly trend was down. So you could have also traded the strong euro versus the yen, and you can see here's the hourly. It is above the point of control of yesterday, the most actively traded price, and the upper value area. So that made sense once you saw the currency meter, which let's bring this back up. Start to show a little bit of weakness between 11 and 12. Here's 11 and 12 right here. And let me bring up the colored bars so you can see where the previous hour's point of control is. So here's 11 and 12. Price, was finding support right at the upper value area. And 11 o'clock it started to show some strength. So you might have actually went long right here. When it went from underneath above the value area the previous hour, this is the most actively traded price. Anybody who was short during the previous hour, or I should say most traders that were short the previous hour, are short around 99.90. So when it breaks out right here, it adds to the upwards momentum. And notice how the next hour it came down. I would have put my stop a pip or two underneath here. It came down, didn't break the value area. At that point, it's very likely to go up. And it does, and the bars stay pretty much green. Again, I prefer the histogram on here. So I don't have the previous hour's value line or point of control on there, but you can see a lot of strength here. If you see a lot of strength and one bar has not that much strength, like this bar right here, you can always yank your stop up underneath, that bar's low. And again, you can also use our very fast digital signal processing based moving average. It tends to be, even on a very fast 5-period moving average shifted 2 bars to the right, it tends to be 1 to 3 pips faster than a regular moving average. So you could also have used this to get in. Maybe you got out of that trade with a small profit, you got back in again here around 93, and then you got out of it up here at 13 with another 20 pips. A lot of traders don't realize that you only need 10 pips per day to double your account every 2 months. Let me just quickly show this planner here. If you have a $2,000 account, whoops. If you have a $2,000 account, you can see getting just 10 pips per day doubles your account pretty much every 2 months. Some months or some periods more and some periods less because we're not using micro lots. We're just incrementing it by one mini lot at a time or multiple mini lots. So you can see 16 weeks your account has gone out 4 times. It's pretty much doubling every 2 months. Getting just 10 pips per day. So when you see that, and you get into a trade and you lose 8 pips, then you get in again, you make 20. You just made 12 pips out of those 2 trades. Or if you got into this trade here and you have a little wider stop, it comes up, comes down, doesn't stop you out. At that point, I always move my stop up. If the trade goes my way and just keeps going, that's one thing. If it goes up and then comes down and doesn't stop me out down here, when it starts going up, I'm moving my stop up to pretty much near break even. And I want to yank it up so that I at least get 5 pips on the trade once it moves 10 or 12 pips. But then at that point you can use the next support resistance area or the very fast digital signal processing based moving average to get you out of the trade too.